Hello, investors, and welcome back to Shark Investments, where we help you identify stocks for your further consideration. One of the names you see is not on our list. Can you guess who it is? Let's go swimming with the sharks and find out. Before we dive into our analysis, I want to just remind everybody of the criteria that we use. If you're not familiar with this criteria, I explain it in detail in the introductory video. We look at three things: cash flow, earnings, and dividends. A cash flow 0 is increasing cash flow per share for 17 years. Cash flow 1 is 17 years of increasing cash flow per share with one negative or flat year. E0 is increasing earnings per share for 17 years, and an E1 is 17 years with one flat or negative year. A Div 0 is increasing dividends per share for 17 years, and a Div 1, this is a little bit different and important later on in the video, 17 years of increasing dividends per share with one flat year, no negative years allowed. All right, folks, let's get right into it. Issue 8, People's United Financial Incorporated. It's in green because I own shares in People's United, PBCT. They have a dividend yield of 5.1% as of the 4th of January. And you're going to notice right up front this big yellow nasty bar across here. People's United, as a member of the thrift industry, does not report cash flow. So they do not even start out being able to meet those two criteria. We dive into earnings per share. They are not qualified, but they are qualified as a Div 1. Here you go, Div 1. And their flat year was 06 to 07. We can see that here on their cash flow, earnings, and dividend per share trend line. You'll notice there is no cash flow line, but here's your earnings in green, here's your dividends, and there's that down year, and that stands right out here. When you look at the difference between the years, you can see in 06 to 07, there's no gold bar because it is 0, it's flat. But all the other gold bars are above the line. All right, next up, Aflac. Come on, how many of you wanted to say that when you saw the name Aflac? Great commercials. They too don't report their cash flow the way we are used to looking at it. They are a life insurance company. All right, and they are at 2.6%, and yes, that should be gold. I don't know why it didn't fill. I'm going to have to go in and check my rules. That should have been filled with gold because, yes, I have moved my criteria up to 2.6. That is what the Dow Jones Industrial Average yield is, 2.6. So I've changed this to 2.6. That should have filled. I have to check the rules. Sorry about that. All right, so the earnings, they're not qualified. They are qualified as a Div 0. So every year for the last 17 years, they have increased their dividends per share. You see that nice and clear here on this chart. Dividends nicely moving up. And there we go. Dividends moving up. A little bit erratic on the earnings, but still a good uptrend. And here's what that looks like on the year over year. All the gold bars are above the 0 line. And the green has a little bit of zigzag, but you saw before it was generally trending up. All right, then next up is Torchmark. Torchmark, TMK. They're only yielding 0.9%. They are not qualified for cash flow because, again, they are not reporting cash flow as a life insurance company. However, they are an E0, earnings 0. So their earnings have increased every year for 17 years. Now, this may make them a candidate for someone other than an income-oriented investor. And you can see that they are not qualified for dividends with 2 flat years. Here's what that looks like on the cash flow, earnings, and dividend per share trend. You can see the earnings have a nice uptrend throughout the 17 years. Here's what that looks like on the year-to-year difference. Again, a nice positive trend going there. Really good year in 2018, but the dividends per year not making it. Precious metals market. Yes, believe it or not, somebody from the precious metals market has made our list. Anyone who pays attention to the precious metals market, that's actually kind of hard to say multiple times, you'll know how unusual it is for a company like this to consistently deliver on something, much less 17 straight years. Royal Gold Incorporated, RGLD. They are yielding 1.3%, and they are a Div 0. Can you believe that? 17 straight years of a precious metals company increasing their dividends per share. Now, they did not make it on cash flow or earnings, but they're looking after their investors. Here's what that looks like on the cash flow, earnings, and dividend per share trend lines. Look at that gold line. That's sweet. Nice and up. Now, it's not a big number. But if you are looking to diversify into precious metals and you're either not into holding the actual physical metals, but you want a stock to invest in precious metals, maybe this is a contender. And here's what that looks like in the year-to-year changes. You can see earnings and cash flow have had their ups and downs, but the dividends have always been on the positive side. Novo Nordisk. Now we're in the drug industry, and Novo Nordisk comes in. They're at 2.5% yield, so they're just below that average at 2.6. And they are qualified as an E1. All right, so qualified as an E1. And we see what that looks like. Boy, that's a nice uptrend for cash flow and earnings. And the dividends aren't that bad either, but they didn't meet our qualification with 2 down years here. All right, so there's the 2 negative year over years for dividends that threw them out. But if you look at cash flow, yep, oh man, there's 1, there's 2 for cash flow, but the earnings, there's only 1 green bar below the 0 line, so they are in as an E1. Novo Nordisk. If you're looking for exposure into the drug industry, maybe they're a good candidate. All right, so here's how they stack up in the summary. You see People's United Financial at 5.1 with a Div 1. You've got Aflac at 2.6 as a Div 0. So there's some good contenders if you're looking to diversify your market. TMK, and here's Royal Gold if you're looking to get into precious metals, and then in the drug industry, Novo Nordisk. All right, so who are these 2? Are non-qualified names of interest. There's some cool things about these companies that are worth paying attention to. All right, first up, Prudential, also in the life insurance business, and they are yielding 3.5%, so that's not bad. Prudential, and they came in at they would have, look at that, you would have thought that they're Div 1, right? Well, I did this on purpose because remember, in the dividend per share category, we allow 1 flat year but no negative years, and right here going from 07 to 08, you had a negative year, not a flat year. So Prudential is not qualified by my criteria. They might be qualified by your criteria, and that's fine, but they're not qualified by my criteria. Here's what that looks like. On the trend lines, you can see their earnings were kind of all over the place, but generally on a good uptrend. And here's that negative year for their dividends per share. And that pops out right here on the year-to-year look. So that's Prudential. All right, now, who's the other one that's of interest? Pfizer. Pfizer's in the drug industry. Pfizer's got 3.6%. They are a company that I think most people will recognize their name, Pfizer. But you can see they're not qualified by cash flow, earnings, or dividends. Here's where they ran into some problems from 8 to 9, 9 to 10. Yep, we all know what happened in those years, so probably not a big surprise to folks. So there's what Pfizer looked like in the cash flow, earnings, and dividends per share trend. So, you know, you can imagine investors were thinking really good up here, and then all of a sudden the dividends went way down again, and then they've started back up. So that's the kind of the turmoil that I try to avoid, and why I use the dividend per share criteria that I do. And that's what that looks like on the year-to-year change analysis. They've had their ups and downs. You know, that's pretty common in the drug industry. I'm sure that those of you that specialize in the drug industry, you're used to it. But I don't specialize in any particular industry. I'm looking to diversify my portfolio into companies that I know are going to be pretty stable and continue on uptrends throughout the life of my holdings, which for the most part is going to be for a long time. So here we are in our total summary. Prudential and Pfizer. And let's just go ahead and complete this one. Prudential and Pfizer. They're not qualified anywhere along the line, but Prudential looks like it should have been when we looked at the numbers, because it was one negative year, and we don't allow the negative years. All right, everybody, that's it for this week. I look forward to all of your comments. Please take a look and let me know what you think about me being that hard on Prudential. Should I have let them in because they had one negative year? Well, it broke the rules, but maybe that 1 year isn't such a bad thing. I look forward to all your comments. Again, as always, please let me know. If you like the channel, go ahead and subscribe. If you've got some problems with my formatting or the way I'm presenting stuff, please let me know that too. This is only the third one that I've posted, so I'm working on making improvements, and I'm taking all your comments to heart as I do that. Y'all have a great week, and we're out of here.